Hello and welcome to Precise Algorithm Trading. This is Dave, and it is Monday, May 8th, 2023. And I'm going to go buzz through the markets real quick and then buzz through uh, really look under the hood, which is we use the bullish percent indexes to see really where the risk is in the market. Um, Basically, who's in charge, buyers or sellers, and we've got a tool for that. Um, it's not ours, it's just out on the internet. It's kind of nice. And then the last thing is our automatic trading systems that we run off of the website. So, well, not just the website. We we have the algorithms available on the website, and you plug them in the TradeStation, and I'll show them to you. So, this is the S&P 500, and I got a lot of lines on here. I drew these Fibonacci's on here the other day. Those are really just it's a way to measure a range, and I could go into a whole soliloquy about Fibonacci's, but the bottom line is that's the recent high, that's the recent low. I don't know if you can see where the cursor is on the right hand side, the crosshairs. So back here on February 2nd, down to the low on uh, March 13th, and now we're up in this zone, thrashing back and forth between the 100 line and the 61.8 line. And the 61.8 line is the line in the sand, and we got a big bounce off of that at the on Friday actually, um, which it looked like it was headed lower, and now we've got a big bounce off of the 618, and today was just back and forth. That's a doji for what it's worth. Just means a candle of indecision. It basically ends up in the middle somewhere. It's got a higher wick and a low wick. Sometimes they're big wicks. This happens to be a little one or a small ranged doji. Um, and then you can see that tomorrow's action has really just started. It hasn't really. It's 8:17 p.m. Eastern Standard Time. 8, yeah, thereabouts. Um, so it's been going for actually an hour and a half or so, almost 2 hours, and it's really hasn't done much. When you look over here on the left hand side where I'm highlighting these things, those are the index futures project products, at least the ones I have up here, um, and they're showing the overnight action down here where the S&P, SPX, the Dow Jones Industrials, DJI, the RUT, which it zeroes out every night, which drives me crazy, and then the COMP there, that's the Nasdaq. So you can see the Nasdaq was up by 0.18%. We'd have to go in and look at the Russell. Well, we can do that here. You can see it was down a little bit. I'm not going to do the math, but you can see it was down a little bit. The Dow was off by only 0.17%. The S&P was up by 0.05%. So that's a mixed market. Another way I do that is to look at, I put them all together. You can just put pluses in between all the indexes up there at the top, and you can look at it kind of all in. And this is the futures products. I've got one of these down here. This might be it. I might be asking for trouble though with the technology to try to add these together. There we go. That's just the Russell and the transports. Uh, I'll give it one more shot. There you go. That's the rest of the markets all added together. So, what do you get from this? This is a tough zone right here where obviously the candles are red. The candles are green over on the weekly chart. So, um, this thing could go either way. I happen to think it's going to go higher, and there's a number of reasons for that. You can see here in May that it's green. In June, it's yellow. In July, it's green. These things automatically calculate, so it gives you the last 10 years worth of data. Um, and that's an average for what it's worth. So, it's just my opinion that this thing's going higher. There's another reason. If we look at the actual SPX, which is a lot of people look at the SPX and call that the market. So we actually got a buy signal today on the SPX itself. The SPX is a tradable instrument. It just happens to be pretty expensive. $4,138 a share, or I believe is how that works. I don't know that I've ever actually traded it personally. Versus the SPY contract, which is what most people would trade. That's the spiders, which is $412 a share, so a tenth of it roughly. And it's got a signal today too, so that's interesting. When the we don't really have the signal on the futures contract, but we do on the regular contracts. That's just something to look at. We're still bullish on the long term over here on the weekly. We have not got it to roll over, which is good if you're a bull, which generally most people are. Um, this is the Dow, and you know it's been struggling. It needs to get up and go. We do have uh, the red trail indicator on the left on the weekly chart is bullish, although the daily is not so much. Um, so we'll see what happens here. What's the Nasdaq doing? It's been powered higher a little bit more today, and it's in a squeeze on the daily. So that's when the Keltner channels get inside the Bollinger Bands. I think I said that wrong. The Bollinger Bands get inside the Keltner channels, and that means volatility is low, and it has been since the squeeze set in, which is here back at uh, the 19th of April. So when this thing goes, and I've drawn a rectangle around that whole price action since the 19th of April, when it goes, it's going to take off to the upside or the downside. When it breaks that square, that's basically what, or rectangle, that's what's going to happen. Usually, that could be a muted move, but most of the time it's got some pop behind it. All right. I think that's, well, let's look at the oil. Oil's been popping back up off of the bottom there. However, we're at these important moving averages, or these yeah, that's what they are. They're moving averages. So, what's the next move from here? Probably come up here, retest this moving average, probably come back and fill in this area down here somewhat, and then figure out if this is the bottom or if we're going to go lower than that. If this thing gets up past these moving averages and starts to take off, and the moving averages cross back over to the upside, then I'd say we are in for a higher market. But the weekly looks pretty rough, and so right now it's really just a big back and forth. It's been in a trading zone, trading range, I should say. All right, that's that. Let's flip over here to stockcharts.com. Type in bullish. Look at the bullish percent indexes. It pops them all up here, which is nice. We look at the point and figure charts. Here's the Dow. Dow Industrials didn't move today. Transports didn't move today. Pretty common, really, for they gotta have big moves for these things to move. Here's the NYA, moved up by 0.93% today. And if we get this move to get up past 52, so that would be 52.01 or more, then we will actually have a new point and figure buy signal when the new column of X's would surpass the previous column of X's to the upside. So in order for that to happen, we got to get 52.01. If we get up here within just past 50, we'll actually be in a new column of X's, and then we'll just have to watch it from there. Where was the Nasdaq? Is that what I was just on? No, the Nasdaq came up by 0.66%. It's been hanging, and it needs to get up and going. It's been it's been hanging around down here on the bottom of a column of O's. Transports, I think we looked at the SPX moved down by 1.16% today. The OEX is the S&P 100 instead of the 500. It didn't move. The NDX is the NASDAQ 100, and it didn't move. So really a sideways move today. So that's a fun graphic. All right, well, let's move back to, and then let's look at these. This is our automatic trading system. So there's going to be something to notice here today is I did some work on the YM over the weekend, and I think this is a better looking equity curve than what we had coming into the weekend. And I'm going to show you the difference, but I'm also going to show you that there's not a big difference. I mean, it's a nuance, but I like it better, and I can tell you why. So anyways, we actually had some down movement today in the YM, and this is what it looks like on a 6-month basis, which I think is a better looking equity curve than what it was, because it used to look like this. So just look at the nuance there of we still have a down move in this recent price action. There's more trades there than there are here, and that's the same thing as here. But at the same time, we had this low, that higher low, and then we had a lower low, which I don't like. So I went in and made some changes to the algorithm itself, and it A, trades fewer times, and 2, I really found some better parameters to wrap this thing around. And yeah, I'm going to go ahead and flip over to here. So this is what it used to look like, and that's where you had a low and a lower low, which, you know, that happens. It's not the end of the world. But when I evened it out a little bit, basically modified some of the algorithm, you know, we still have a low, and we still have another low, and we still have a lot of the same action, but this just evens out a lot of these lows better. And I would rather trade this equity curve, which takes a lot of work to like go from this to this, but you can see it's a little bit better. And in the long run, you know, well, depends on your point of view, but I'm going to call that, yeah, I don't know, it's 10% better. And you have less drawdown. And so this is what I'm going with going forward. If anybody has purchased the algorithms online, I'll give you the update to this, and I'll make it available going forward. So, all right, that's that. Let's flip this off. If anybody has questions too about that, I'm more than willing to talk about it. It's pretty simple. All right, so that's that, and that's what that was. And here is the Russell. And so we had our equity went down today, and all three, you know, across the board, I should say. We got 3 of these going on. But at the same time, and I showed this over the weekend, I mean, this is a pretty nice equity curve. And it's really similar to what we had before as well, just trades fewer times and has less drawdown, and that's really the bottom line is what we're looking for. So here's the NASDAQ, still our best one. Well, I don't know. They're all getting arguably better all the time. So, but we still had you know, we lost today, but so what? It's not what we're trying to do here, and this is what it looks like on a 6-month basis. So, yeah, that's it, and that's what I got for you. Hopefully it makes sense to everybody, and hopefully everybody's weathering some basically sideways action in the markets, and maybe we'll get some movement here pretty soon and we can take advantage of it. Take care, guys. Good trading and good night.